Welcome back. The S&P 500 wrapping up its worst week of the year. Broadcom and NVIDIA among the biggest decliners of the week. Well, joining us now on what investors should do at Monday's Open is G-Squared Private Wealth's Victoria Greene. She is also a CNBC contributor. Victoria, let's start right there. What do you do after the week we've had in the markets? How do you position yourself either ahead of the Open or when you start calling your broker, whoever else, to position yourself once it starts trading on Monday?
So first off, I think everybody needs to go home and have a beer after this week because September's doing what September usually does, which is be pretty terrible. Come Monday, don't panic. I think it's a little early to go all in. I don't think the bottom's in yet. We're not buying this dip, but we are nibbling it. So for a lot of people with cash on the sidelines, we've been saying, hey, look, we love NVIDIA when it was up 20% ago. We start dollar cost averaging our way in, but absolutely, semis under pressure, tech sector worst performing this week. And so there are opportunities out there, but you need to be patient. Don't go all in. Realize there may be further downside left in this market. September's historically ugly. October, we may have an October surprise. So I'm gently nibbling. I'm making sure I have my cash ready. But the number one thing also investors need to be aware of is understand your liquidity. Liquidity always trumps investment strategy. Make sure you have enough cash flow to get you through any of your operating expenses over the next 60 to 90 days. Then you can pounce on opportunities. We're not panic selling. I don't think this is the end of the bull market. We have wonderful uptrend technicals still supporting this market. This is just a typical September. We're doing what it usually does in September, and it hurts.
But what if you didn't have quite enough dry powder? I guess that's the question. If you were positioned kind of fully, you've been mostly invested up to this point, maybe you even took a little off 3 months ago, then you're fine right now. But if you're one of those people who just bought into the market closer to the highs and then this happens, how much dry powder do you really need so that you aren't tempted to sell too much?
Yeah, I think you've got to be careful to not fall into the, well, it's going to keep going down and I'm going to know where the bottom is, because the bottom's always really hard to catch. I think we can a lot of times spot, hey, we're hitting a rocky period. We got overbought. We got stretched. This market uptrend's been struggling. But for those that don't have enough dry powder, you do need to understand, do I maybe need cash? If I need cash, then you absolutely need to sell and have it on hand. Without a doubt, there's risk this could push lower. But if you don't have dry powder, we're really in the grin and bear it. We're not getting rid of our tech trade. I don't think AI is dead. I know this is terrible, but Apple's got their event coming up. Remember how this felt the first week in August? Everybody was saying, oh my God, they need an emergency meeting, 50 basis points right now, the end of the world is coming, and then we found our footing. So if you don't have dry powder, I think you're a little bit stuck, grin and bear it, because right now, historically, it's in your best bet to not sell out after a 5% down week, and when we still have these really nice, strong uptrend technical patterns.
What do you think changes the narrative that we're seeing in the market? What's the next catalyst? What would it be that would propel it a leg higher?
One would be the Fed, obviously, on the 18th. We've got CPI next Wednesday on the 11th. That'll be a market mover, always is. You know, everybody's waiting on the Fed. I don't think we're getting 50 basis points. Actually, as an investor, I think you should be rooting 25, because if the Fed's cutting 50, that's going to spook the market saying, oh, the Fed's seeing something we don't see. But right now we're in a dead period. We don't have a ton of earnings coming out. So we're kind of, until we hit Q3 here in October, we're very dependent on economic data. And so we're going to have chop and macro movement, and we're going to be hanging on every single Fed governor's word. We're going to be parsing every single statement. We're going to be looking at every piece of data, because there's not as much coming to the market on the earnings front. So I do expect it to be a pretty volatile month.